Welcome back. Well, the markets have had a big run, especially the Bank Nifty this month is up 10% in 4 trading sessions. Nischal Maheshwari is now joining us from Centrum. Nischal, good morning. Thanks for joining us. Of course, banks have been the key talking point, but I wanted your thoughts on Reliance. That's a stock which has now seen a brutal correction, but is beginning to make some kind of a comeback. Do you think it's now worth looking at it again?
Morning, Anuj. We have been positive on Reliance. I think there was a disappointment in this current quarter results, especially on the core business, on the GRMs. And though on the petrochemical side, the recovery was good. So I think there has been some profit taking basically after a long run up which has happened. I think these prices seems to be a good place to once again start entering into that counter.
Okay. Nischal, hi, good morning. The other space that has done really well this quarter around is the entire tire sector. So whether it's Apollo, you had JK Tires, CEAT, MRF reports its numbers today as well. But the overarching theme is that there's a big bounce back here. Do you like any of these names?
Morning, Sonia. Unfortunately, we don't cover any of the tires companies. But I'll just make a general comment about the auto ancillaries. And tire being one of them basically. So given the recovery, I think, yes, most of these stocks have done well. My favorite has been when I used to cover it in another place was CEAT. So that company continues to be very, very strongly placed, especially given that the four-wheelers, cars is coming back strongly. So, and the two-wheelers also. So I think CEAT is what I like among the space.
Okay. Well, Nischal, the markets run up a lot. So at the moment, where are you looking for value?
So Lata, I think there has been a lot of value if I look at it across these spaces, whether it is banks, whether it is, and you will find individual pockets. And there are a lot of stocks which I can name, like ITC is one of them. Definitely, I think there is great value out there. And I think today we'll have results of ITC, which I think, given that what we've been seeing for most other FMCG companies on the FMCG side and food side, you'll find some surprise coming in there. Again, in banks also, basically, you'll find spots like SBI, great value again, very strong results, great value. So you will find these individual spots everywhere, basically. So you have to be now very, very stock specific. You have to understand basically you are very close to your all-time high on the Nifty. So I think individually you will not find a lot of spaces where you'll or particular sectors basically where you'll find value, but individual stocks you will find a lot of value everywhere.
Okay. Well, actually, it's good you raised the issue of finance stocks, and I wanted to ask you about NBFCs as well, because the Reserve Bank has revised the co-lending norms. That is, banks and NBFCs can lend together to the same borrower. The previous scheme was co-origination, where NBFCs were more like brokers. Now it can be the same loan to which two people are lending. So for the NBFC has to retain 20% of the loan of the borrowers whom they identify, which means they can expand their number of clients 5 times more, technically. If they are able to source borrowers for the banking system. Nischal, stay on. We have Ramesh Iyer, the Vice Chairman and Managing Director at MMFSL, joining us to tell us how this works from an NBFC point of view. Good morning, Ramesh. Thank you very much. How do you look at this vis-a-vis co-origination? You think you, in particular, can tie up with, say, an SBI or an ICICI and vastly expand your book?
See, firstly, everyone thought NBFCs compete with bank. So this clarifies that we complement each other, right? So working together, I think the NBFC strength, if you look at deeper penetration, ability to retail recovery, right? Large number of people appointed locally who have local knowledge. So all this get put to use jointly with a bank with whom anyone will tie up and go more deeper and look for customers. There are many customers who want maybe a 5-year, 6-year loan, which possibly an NBFC may not be able to lend because of their ALM mismatches. Sometimes there are rate pressures where the customer is very rate sensitive. And therefore, I think there are many opportunities. I personally think the credit penetration will grow, as well as it will help the retail volumes whether it's automobile, tractor, SME, any of those segments. So I think it's a great arrangement where both the entities can be benefited, eventually benefiting the consumer.
Okay, Mr. Iyer, good morning. So that was my next question. Overall, what kind of boost do you think it would give for volumes, not just for MMFSL, but for the industry as well? I mean, any ballpark numbers that you can share?
Very difficult to put a number, but I think if the product design is done well, and if both the entities clearly agree on the process of lending in terms of turnaround time, in terms of documentation requirement, etc. I don't know, I can just put a number, maybe 10% to start with shouldn't be very difficult, but it can really broad base.
How long will it take to arrive at this kind of a JV with any bank? Will you be ready with one partner or two partners by March?
What we would do is we will kind of showcase our strength, and we'll showcase what kind of consumers can we really look for. And then we will leave it to the partner really to tell us what are they looking for from us. I think it will be more than one partner. I think I'm not too sure that it may be a great idea to just have one partner, because there are regional specifics, regional differences, requirement. So maybe it's a good idea to look at more than one partner.
No, I don't think the rules also forbid it. I would assume that they allow as many partners. Only in-house they can't. Like, I guess HDFC can't partner with HDFC Bank. I mean, it has to be out of the group partnership. But Ramesh, I mean, how long would it take to arrive at a JV? Assuming that you and any one bank has agreed on a co-lending, will you all be able to do the fine-tuning in a few months?
I should think so. I mean, if we can choose the geography right and the products that we want to finance or the consumers that we want to look at, I think rest of the things are pretty easy to tie up. I think it's about which consumer, because we do work with one set of customers, the banks must be working with one set of customers. There's no point in going to the same set of customer. I think the whole idea is that the two together can broad base and get more consumers into play. And therefore, once we agree on the geography, the product and the kind of customers we are looking at, I think it's not very difficult to get into an agreement in a much, much shorter time.
Okay, I had just two quick questions, Mr. Iyer. One, I mean, of course, the approval has come now, but this has been in the works for a while. So, are there any major challenges for this to, smoothen out? And two, where do you see the maximum amount of volumes? Will it be largely with auto loans or any other vertical?
I think, why it wasn't possibly working earlier. Of course, the deposit-taking NBFCs were exempted earlier. They were not allowed to do that, etc. But more than that, now is actually co-lending, right? And the consumers are going to be handled by the NBFC. Therefore, the NBFCs feel more comfortable, confident that yes, the consumers are with them. Second is there is NBFC taking 20% of the liability. So therefore, they will also be extremely, extremely clear and cautious the way they want to lend, because they are going to do the recovery as well. As against the earlier process was just get a customer to a bank. So not many may be wanting to do that. So therefore, in this process of the current format, I think it will be a very interesting format to really increase the volume. I am pretty convinced. And as far as who will we lend to, I think I would think all kind of consumers, right? It can be automobile, it can be tractors, it will be small traders in the rural market. Especially I personally think this will help people who want more than 4-year, 5-year kind of a loan, where NBFC has got the customer, but we are conscious of our ALM, and therefore maybe we are not adhering to those kind of customers, and therefore a new bunch of customers will come into this.
More generally, Mr. Iyer, what do you expect in terms of asset quality for you, say 12 months down the line? Some restructuring and some moratorium things are behind us. How would you see asset quality, and how do you see liquidity? Is that plentiful? Cost of money? Will margins expand?
So as far as liquidity is concerned, availability has not been an issue for large NBFC like us, and the rates have come off, and therefore surely we do expect that margins will improve. And also for the reason that all of us not knowing what next, all of us were holding liquidity, right, to meet our liability requirement. Slowly we are also reducing that kind of a need, because there is adequate liquidity available. Our own collections have substantially improved. So therefore that itself will release some margin. if we were to reduce our holding as far as liquidity is concerned. So far as the asset quality is concerned, very interesting. From April to now, if we see every month, we've seen improved collection efficiency, and we have actually entering the good 6 months as far as rural is concerned. We saw it in October. The buoyancy was very positive, and the monsoons have been generally good. We do expect farm cash flows to hold up. A lot of infra projects will open up, I'm sure, in the next 3-6 months' time, which will also add to cash flow. My own gut feel is that the asset quality improvement would be seen from now on going into the next 12 months, and the sentiments are turning positive and cash flows are positive.
Okay. All right. Thank you very much, Ramesh Iyer, for joining us. Have a great festival season if we don't speak with you.
Same shoot. Thank you.
Well, Nischal, directly to you. NBFCs, are they becoming attractive now?
Lata, I think some of these, so what I was hearing from Ramesh also just now, I think what we have to actually look at NBFCs which are more into large retail space. There, I think they have an advantage. They will be able to bring the customers to the bank. But I'm saying NBFCs which are largely wholesale in nature, I really don't know. Basically, they will be able to really take advantage of that because they are competing directly with the banks. So retail NBFCs will be able to take advantage where they will have a customer base to take to the bank. So, but once again, most of the retail NBFCs, I don't think so, had a very big challenge as far as liquidity was concerned from the banks. So, because they were all good rated companies, whether it was MFFS or Bajaj Finance, these are two large retailers in the country. So, we have to see how this whole thing pans out.
No, 1 minute. Don't you think people like, say for instance, even India Bulls, they have a superb distribution and this is easy picking, they can use their vast network more efficiently. It's an operational leverage issue. Or even for that matter, say Edelweiss or IIFL, they already have a network. Won't it benefit them?
So, I think, so once again, I'm saying if there is a large retail network, yes, definitely. If there is a large retail customer base, yes, that will that will be an advantage to them. But NBFCs which are largely wholesale in nature, basically, obviously they are directly competing with the banks.
Okay.
So there it may not really impact, or it may not really help them.
All right, Nischal, we'll leave it at that. You have a good weekend. Thanks a lot for joining us and talking about sector, stocks, as well as the way forward. Let's talk about a tech company now. Birlasoft is a company that provides digital and information technology consulting services across organizations and industries. We're going to discuss their earnings now. It was a mixed showing from them in Q2. The revenues declined for the second consecutive quarter, but the margins have expanded significantly. Further, the company's deal wins have also surged over 50%. Dharmender Kapoor, who is the CEO at Birlasoft, joins us now to talk about that. Mr. Kapoor, thanks for joining us. The texture has changed a lot in this post-COVID era, with digitization, taking center stage and a lot more deal wins coming through. Can you give us some visibility on deals? How does the situation look, say, over the next 6 to 12 months?
Good morning, Lata. So the deal wins side, I believe we have done very, very well. In fact, the momentum earlier we thought that will go down, but it has picked up very, very handsomely. In the quarter one, as you could see, that we had very good set of wins of about $170 million. But in the quarter two, we have done about $274 million of wins. It is just that while the wins are there, the execution is not as quick as it used to be. But now that the markets are opened up, the execution also has picked up. So I believe that the quarter three and quarter four is going to be good for both deal wins as well as for the execution.
Yeah, Mr. Kapoor, you actually said what was on my mind. Why is it there was a QOQ decline of 4.6% in your revenues? And that is even more than the quarter one decline. In most companies, we saw a dramatic improvement actually in Q2. What went wrong?
So, no, there nothing went wrong. Sometimes every good thing also comes with an equivalent bad thing. We did quarter one much, much better than anybody expected, for simple reason that there was a milestone achievement that happened in the quarter one, and our revenue was far better and the decline was very, very small for us. but that led to the void for the Q2 that we had to fill by other projects. We won some of very good deals in the Q1, but that could not be completed from transition perspective in Q2, and that revenue has shifted in the Q3 and Q4. So I believe that our Q3 and Q4 will make up for what we could not make up in the Q2. So there is nothing wrong. It is a completion of the project. At the same time, in the Q1, we were able to negotiate with our clients very well on the discounts and deferments. So we did not take the full quarter impact in the Q1, whereas Q2 is a full 3 months impact that came because of that. All these are limited period discounts. That advantage also will get in the going forward quarters.
Okay. In fact, it's very positive what you're saying is that up until now you were getting deals, but execution was the issue. But now execution has also picked up. So what could the revenue run rate and the deal run rate be over the next few quarters? I mean, up until now you've been doing about $275 million every quarter in terms of deals. What could the run rate be in the second half of the year?
So I'm very confident that we will continue to have very good wins going forward also. It is very difficult to predict a number, but it definitely is going to be an equivalent number or closer to this number. So I don't see any challenge with that. As far as the revenue is concerned, I'm sure that we will be showing the growth in the Q3 and Q4.
I don't know, Mr. Kapoor, there is still a lot of worry. If your FY20 itself revenues were lower than FY19, now are you going to at least come back to FY19? The fact that you are lower in first quarter, you were minus 3.5 and now minus 4.1, would worry your investors whether you will be able to come back to say 3,400 crore revenues at least, will you?
Looked at what had been our performance year on year, because there are two parameters that we had to look at. If you look at year on year performance for Q1 and Q2, we had done much better than the previous year. So from that perspective, we are very confident and we know that we will deliver better than the previous year.
Okay.
You also have a higher base in Q3 and Q4. That's why I'm asking, will you be able to do better than last year?
Oh, absolutely, we will do better than the last year. Yes.
Any number? I mean, will you be 5% higher? You will have some visibility because we are already halfway into Q3. So that's why I'm asking, is there any visibility at all?
No, our internal policy doesn't allow me to share the guidance because we do not do guidance in the market. But I can only give the larger indicators that there.
Okay. Any plans to utilize your cash in the next 6 months? I mean, you have about 900 crores of cash. What would the plans be?
Correct. So I had discussed this before also that there are various possibilities to use the cash. We are in fact getting serious about if there is an asset that we need to look at in the market to ensure that we pick up that to improve our capabilities so that we can see non-linear growth coming in the future as well. So we are evaluating as to what would be the right time and what are the capabilities that we have to go after. So that's one key option that is there, but the other two options where we have given dividend in this quarter. So we will continue to look at in every quarter if there is a possibility of either giving the dividend or there is a buyback option. So it is the proposal in front of the board and we will wait for them to come back so that we can have the discussion.
Oh, okay, that's important. Mr. Kapoor, finally, your utilization improved substantially. Can you do better? And you were cutting your long tail. Is that cut over?
So the long tail cut, in my opinion, is very much in line with what expectations that we kept with ourselves, because we wanted to put our more focus on cross-selling to our larger clients, whereas there were many clients which are very small in nature, and there was also a margin drain that happens with them. So we have shifted our resources from those to the more strategic ones. So we are definitely over with that exercise, but it is a continuous exercise because as you win new accounts, sometimes they're small to begin with, we'll continue to develop. So it is a spring cleaning that we'll continue to do probably every second or third quarter. But for now, we are absolutely at the right place where we should be with respect to the portfolio of our clients.
All right, sir. Pleasure speaking with you. Thank you very much, Mr. Kapoor, for joining us. Have a great festival season.
Thank you very much.
All right, we take a quick break on that note and we are coming up with our technical experts. Ashwini and Mitesh will be joining us.